comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Alrighty, gentlemen. Welcome back to another episode of Final Settlement. Today is Monday, January 26th, 2026, 2:09 p.m. Eastern Standard Time. Boys, another week, more all-time highs for the precious metals, for the shiny rocks, and Bitcoin's still in the 80s. Are you guys okay? Is everyone okay?
Well, the listeners are okay. You know, we want to check on you, want to check on the team here. It feels like it's been a crazy 72 hours. I'm sure if you were anywhere near inclement or weird weather, you had a plan. I'm still in the middle of it. There's weird stuff happening in Minnesota. There's weird stuff happening across the country. But part of this show, we're going to work to be very energetic to start, so we make sure everyone sticks around. And I was telling the guys this, but I have to prove that I'm prepared. So I've never even had these before, but at this hotel I'm at, there's 2 Celsius. And then we're going to get Nick Knack probably to sponsor the show. So I'm prepared for the energy levels. And I just want to make sure you guys are, because, the Bitcoin price might be a little tempered right now, but we are not. We are not.
Look at this. Look at this shit. I mean, this is what I will say. It is just astounding. So silver has added the equivalent of 1 Bitcoin market cap in the last 30 days. Over the last 6 months, it's added 3 Bitcoin market caps to its market cap. Now, if you zoom out a little here, things start to get a little different. So, always be aware of zooming out and not looking at any short time frame and drawing too many conclusions. But yeah, you said it well. There's a lot going on in the world. I think if I zoom out and think about what it means for precious metals to be running like this, I think it's easy to conflate and say, it's reshoring, industrial manufacturing, all these things. We need all these precious metals and materials to build things domestically. And so I think it's easy to miss that, what it really reflects is the money breaking and a flight to sound money effectively. And I kind of perceive silver as kind of an altcoin to gold in some sense. So it kind of makes sense in that context that it's right now at least running a little bit harder than gold has been. But what do you guys make of this?
Look, I mean, this is easily the most exciting time probably that's ever existed. Definitely in this space. And I was just having a conversation. Last week was very eye-opening. I was meeting with a number of banks and maybe we'll tie into a little bit of what's happening on the capital market side to this. But I was also an hour ago meeting with a prospective or investor that's coming in. And the investors also left a large, he may be listening, but left a large firm and branched out to build a Bitcoin business. And I was explaining to him that, risk adjusted, right? Bitcoin, it's great. We know the price entry point. But really, when you look back at the past 4 years in this bear market we've sat in, when you think about business building, and I pinch myself every day when I think about a lot of the infrastructure and groundwork that is allowed in the time that's being allowed to build, because ultimately, when it's quiet, and this is quiet time, there's so much work that can be done versus when everything's getting thrown at you. And so, we're either very, very right or very, very wrong. And I always want to be in that spot because that's where you get paid for. And so when you say, to your point, gold adding, you go back roughly 12 months ago, and effectively, I don't even know what is that, 10 to 20 Bitcoin market caps. I mean, the real fact is the world waking up that to the dollar's dying, and that we talked about this on the last trade, it doesn't have to leak into it or whatever. It's just the notion that the dollar's dying, and as people understand that and people look at gold, it's not a far directional leap from gold to BTC. And that whole like not only narrative, but market structure and infrastructure has to reassert itself to that new world. And that is what's being rebuilt right now in quiet time. And then when that thing runs and everyone's working on stable coins and multi-party computation wallets and companies are IPOing, and the people that focused on this asset class and the best in class products and services, this is how I was explaining it to him, not because I was trying to also, keep the spirits up because I fully believe it, but also for somebody that's just starting, like it's a thing. If you remember jumping into the space, I was telling him, welcome to the trial by fire. How are you doing? Because I've been hiring in this space for so long, and it's not even about that. It's about that we're usually in downturns in Bitcoin. Like that's just the sick part of it is like you're usually involved when the price is going down, not up. And so everyone, whether it's like joining Onramp or have hired previously at other businesses, you come in or you leave a firm to start a business and the Bitcoin price just tanks and you're just like questioning your whole thing. Because once it's your money, it's one thing, but you're still getting paid in fiat. But then when you're tied to the industry and everything's a little quiet and soft, I was like, look, this is just part of the process. But the point in all of that is you get the real multiples and infrastructure because there's only so many builders. There's only so many people been paying attention to this space, so many people taking the time. And so I just pinch myself at all of this because it's not a matter of if, it's just when. And so not only do you know that it's a win, but you're also getting more time to lay the groundwork on your multiples and the valuation, and we get to look at more deals. I love it. I love it because everyone's losing their mind and people are bleeding out. People have been hanging out there in the Bitcoin space, no net new clients, all the things associated with this kind of like quasi bear market. And we're just getting stronger. We're investing in better companies. We're raising capital on the on-ramp side. So I think it's a great time to be in the industry.
Totally agree. I also think it's interesting, if you just reflect on sort of all the times throughout Bitcoin's history that people have proclaimed it dead. It feels like we're sort of in another instance of that where people are detracting, saying, it's broken. And it's really, I would say it's more so on the crypto side that people are saying like the original ethos of quote unquote crypto and particularly like Web3 stuff really is dead. And it's kind of become, co-opted to some extent by TradFi, traditional banking, who are going to use these rails, but to their own benefit and not necessarily to the original sort of value props of the crypto communities that sort of built a lot of those rails. So that's an interesting dynamic that I think we're seeing play out in real time as these fintechs, the banks, lean into stable coins, real world assets, all those kinds of things. It's kind of like, a lot of the things that were purported to be the value props and the forms of utility of crypto kind of all just surmounted to digital dollars and marginal efficiencies for money movement and asset tokenization to some extent. And Bitcoin can get kind of conflated in that, but I think the real signal is, well, Bitcoin's value prop has always been sound money, and the thesis for sound money is being reflected in gold right now to a pretty massive degree on a global scale. So I think there's real credence and credibility to that value prop and why Bitcoin exists. Whereas for the rest of crypto, it's kind of in this interesting spot where people are recognizing that there's value there, but it's sort of on the margins and it's incremental for a lot of these legacy systems to basically upgrade to these more digitally native rails. So yeah, that's kind of where we're at. And Michael, you mentioned the infrastructure side and all of that sort of progressing quietly. A big headline from last week, which we'll start here, was BitGo finally going public. Believe it opened at $18. I'm not exactly sure where it is right now. But Mike, maybe I'll hand it to you. BitGo is a key partner of Onramp and have been great partners to us on the infrastructure side. But maybe just the significance of this to you. What are your thoughts?
Yeah, I mean, I think this is I think they're touting it as one of the first pure play kind of digital infrastructure businesses. BitGo being, they're very widely appreciated, I think, because they're generally been behind the scenes. Mike Belshi, CEO, inventor of multisig, which is widely, not known. That architecture as well that's used across the industry for like collaborative custody was really pioneered by BitGo with their open architecture, holding a key and then creating different sandboxes for infrastructure players, and then obviously have branched out. One of the other things that's very widely not known is in the 23 bear market. So the market collapses in 22. 23, a lot of firms are gone, blew up, got in bed with the wrong counterparties. BitGo was fairly conservative. I believe their chief compliance officer was formerly COO, I think, at Coinbase. So very polished business. They aggregated and consolidated a lot in the industry around custody and infrastructure, and then also raised a pretty significant round of that bear market to be aggressive when it came to the amount of infrastructure and clients. So I think they said it a little over $100 billion in total crypto assets under custody. It's an interesting model. I think what's most fascinating, if you look through the S1, and I was playing around with our girl Claudette, which is funny because my wife says it's a boy and I say it's a girl. And I don't, and so I don't know if it's a they them or if there's if we have to decide. But either way, last night was referring to their economics, and it's an interesting dynamic because I think they tout like 16 billion in revenue. But in reality, it's about 500 million because the 16 billion is because they're on a principal basis on the trading side, which has very slim margins. So they're really at about 500 million in revenue. And then they're right about break even, if not like $1 million to $2 million in net profit. And so I think what's going to be very interesting to see how they scale that. Now, the thing that I'll say is the infrastructure is the hardest layer because it's infinitely scalable when you think about it. So a lot of the groundwork and things that people need to be laying into, whether it's custody, trading, they have a new stablecoin issuance product. So I think really now is to see their stock price and what happens. Thinking about this out loud, there's probably there'll be a tale of two paths, and we'll see where it plays out over the course of the next, call it 12 to 50, 60 months, 1 to 5 years. Is do they go down a path of distribution and being able to really monetize across being infrastructure and taking some margin in bips of across these transactions, or do they end up acquired by a large scale bank that needs that infrastructure? So that's kind of how I'm thinking about it, but it's awesome to see in the industry. And then obviously with their bank charter and being a custodian in our multi-institution product really levels up across the board. A great example of that is they're not only a qualified custodian, but a trust charter, and they hold over $100 billion in assets. And then they've also are now a publicly traded company because obviously it still comes up. A lot of folks are uneducated or need a little bit more understanding of how multi-institution works, the legal frameworks, the keys being segregated. And it'll come up because, we're all adversarial. Well, what would happen if two custodians would collude? And that kind of changes a little bit when you have a publicly traded company because there's a lot of reasons why a publicly traded company wouldn't collude to steal somebody's, 10 million or even our largest clients' Bitcoin.
Yeah. Liam, any thoughts on this one?
Very well said. I think one of the interesting aspects of BitGo is as the cost of going to market in these different products and solutions really compress, whether it's, existing fintechs that want to offer Bitcoin and digital assets in general is there's new market structure. Any type of bank or fintech that needs to offer it to their clients, BitGo has done a very nice job of offering a B2B2C type infrastructure. So, today we're seeing not just digital assets, but everything apps across almost every type of app there is. And not just app, but just like platforms. Whether it's prediction market, equities, and digital assets. And I think that BitGo is, as that continues to proliferate, as there's clearer rules of the road for market structure and what that means for your clients, BitGo has a nice wedge of being able to offer that B2B2C play. And so I think that that's an interesting proposition in a world where I think we just continue to see very strong compression in terms of the actual trading fees of Bitcoin and broader digital asset sphere. And I know those guys have been working for 13 years and have been through a lot of up and downs and a very uncertain and volatile time in the industry. So it's just huge congrats to the team as they go public now.
100%. And another one we had on the list, we don't have to spend a ton of time on this, but I do think it's relevant just given, thinking about BitGo's IPO. And then, I think Kraken is still preparing its IPO. But then we had this news from the other day. Ledger is mulling a IPO at over $4 billion. Ledger's been in the news for some not so great reasons recently and sort of historically over the years, in terms of PII being leaked for hardware devices, which have led to a lot of both digital and physical attacks on crypto holders. Any thoughts on this one? A $4 billion valuation for Ledger?
I think the biggest thing, it's similar with BitGo in a different lens, because the Ledger hardware device and the amount of assets that flow through it, I would say it was considerably harder to monetize. Is really how do you just monetize around those custody assets? Because if they're sitting in cold storage, it's harder to underwrite these firms when it comes to traditional custody in digital assets versus finance when it comes to net interest margin and what's going on with that underlying. And so that's really going to be, I think, the thing to look out for is where does the value accrue in a stack, which is around infrastructure, or is it around like the client facing financial services? Is it somebody hybrid mixture of both, or is it the client facing financial services? Because ultimately, we understand, especially in 2026, how much brand and distribution matter. And I always like to point back to like Goldman Sachs versus the bank that when you used to, I haven't been in Walmart in a long time, but there's like a bank in Walmart and like they basically have the same rails when you think about a checking account, but the value that can be charged and derived for them are fundamentally different. And it's because of Goldman Sachs brand and the network and the client services they've developed. And so I think that's really the hard part around infrastructure and just pure play custody and back end is, can you get to a scale where the margins make sense to really build a Goliath of a business in this space? Or do you really have to own that full client relationship, to Liam's point on the B2B2C, to extract mass value? I don't think we know yet. We have our take on it, on how we're building Onramp, but I think that's just an interesting dynamic to watch out for, because specifically with Ledger, is their hardware manufacturer sales, I would imagine, are a predominant version of that. They have their enterprise sales, but really figuring out they're close to the asset, and the pitch that they make to investors historically is if you get close to the asset, we can monetize it. That's still TBD. So that's just something to be aware of.
Yeah, I'm not 100% sure, but I would imagine that the vast majority of the enterprise value of how they're looking at Ledger is Ledger Live and them offering the ability to buy, sell, swap between different crypto assets directly in the app. And that's likely where a large percentage of their gross profit actually comes from. And they can take a premium spread on that versus a Coinbase, because there are some types of people who will, pay for that just to make sure that it's in cold storage as they do that. And so I'm interested to see how this one plays out, what type of institutional investors there are, and any kind of disclosures that they have in the S1. But yeah, TBD on where this ends up falling out as they go public.
Yeah. The only thing I would say is like, and I'm not positioning this as like necessarily a good or a bad thing. I just think it's a reality of the increasing variety of access points that people have to crypto assets at this point. So I would say onboarding folks to hardware devices has probably plateaued to some extent, just given the the emergence of ETF products, other easier ways that are more familiar with less friction for people to get exposure to these assets. And so I think you're right, Liam, that a lot of what this enterprise value is probably stemming from is stuff outside of just pure hardware device sales. Basically everything else that the company does with Ledger Live, et cetera, it's more on the software side as opposed to the hardware side. So that part, I guess, makes sense to me. But yeah, go ahead, Mike.
It's a great point to bring up as far as the parallels remind me of, I know we're going to talk about like Brex and some of the anecdotes on why they sold. Like there's still asymmetric information and understanding of like what you just referenced, because there's a story around 4 billion valuation. I think they also tout 100 billion in Bitcoin. I think it's 100 billion in Bitcoin in there. It's not, however you want to phrase it, at the custody. But if you have like certain metrics and you're underwriting what a user is worth from the amount of assets, into your point, Liam, if they're monetizing via Ledger Live, you can't make the case, and I think it's what Brian's alluding to, that you can extrapolate that into the future, because what somebody onboarded 10 Bitcoin or 100 Bitcoin or 1,000 Bitcoin with a ledger is fundamentally is not true moving forward. So that's like something that I don't think investors fully account for, is that person putting 10 million bucks or whatever the number is on a single ledger. And then the other side of that is that those individuals are increasingly feeling the pain in moving those assets to other third-party platforms. And that could be because of the physical tax, that could be digital attacks, and that can also just simply be because they want better financial services, a la ETFs, banks, every Bitcoin native firms, our platform. And so I think this also goes into maybe why IPO, but really the asymmetry in not fully understanding this landscape. I can guarantee you a lot of things we just talked about are foreign to a lot of these firms, and Ledger can say they have, reasons why that's not going to happen. But when you work day to day, I've onboarded billions of dollars off of Ledger devices. They're fundamentally like the worst device ever, at least the early ones, to manage assets on, specifically Bitcoin. So it's really like ledgers have been a nice stopgap in this industry. But another great anecdote is when we talk with very wealthy investors that have assets on Coinbase, and then they buy the ledger, but they never unwrap it. Like, they know they should take it off the platform, and then they get kind of crushed twice because they bought this device they're never going to use, and then their PI is hacked, so now they're at risk because people think their assets are there. So I'd be much more bullish on BitGo than Ledger, actually.
100% agreed. The last thing that is worth at least touching on very high level is, I wonder what their enterprise offering looks like, because I know Bybit, through having ledgers across a number of different types of people within the entity, resulted in that hack that happened. I think it was around this time last year. So I wonder if they offer something different to enterprise for their security.
Yeah. Well, they do. I mean, so Ledger does have a very sophisticated enterprise offering. It's pretty expensive. It's actually kind of like the standard for a lot of firms in this space. It's fundamentally different, in my understanding, than what what Bybit was using. I think Bybit, at least for the smart contract that they created for the multi-sig on Ethereum, I'm pretty sure they used it because this was in the writings, that there was anecdotes. They were using like the Ledger ones or the nanos, and there's a lot of problems when you run that because of the scripting language. So generally, like in Bitcoin multi-sig, when you're doing the transaction, you're going to get the change addresses and you're going to get all the information. But I believe that they had put this together, and so on the Ledger ones or nanos, you only got like a hash. And so unless you're going to verify the hash was the place it was going to, that was what was manipulated. So I don't necessarily know if Bybit was using their enterprise offering. I think they duct taped their basically solution together, because they were using, like, what's the thing, Brian? It's there's a Gnosis safe. So like, that's the thing that most people don't know, is like there's multi-sig that's native to the Bitcoin protocol. It's the only crypto asset, and then others can tout multi-sig, but the reality is they're building a proprietary smart contract on top of the single address or private key. And
Exactly.
that's
And it's
ultimately
typically
what got them in
closed.
trouble.
Yeah, typically closed source proprietary stuff. And so Gnosis, Gnoisis, I think, is what was actually where that vulnerability was. But yeah, all was said. I did want to go maybe zooming out a little bit, just in terms of broader fundraising. Michael, you'd shared this pretty thorough report on the year that was 2025 in terms of crypto fundraising. 50.6 billion raised across 1,400 rounds. There's an interesting sort of takeaway here for me, was that a lot of this was M&A activity. So roughly half of this deal volume was across only 21 transactions. So pretty massive M&A deals going on. Maybe Michael, I'll just hand it to you. What stuck out to you in this report?
Yeah. So if anybody's interested in like capital formation, allocation in this industry, I would highly suggest looking through it. I wasn't able, it's very long and looks well done. But to your point, the things that stood out really was the M&A, because this was kind of a quote unquote record year, but also about half of that was via M&A. And then if you scroll down, I think it's probably like halfway, maybe a little less than halfway, is the complete list of 2025 M&A transactions.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. Onramp's multi-institution custody distributes control across 3 independent regulated key holders in a 2 of 3 quorum. No single point of failure, no pooled or omnibus exposure, segregated client-titled vaults. You retain full legal ownership while Onramp coordinates security, compliance, and operational workflows behind the scenes. It's strength of many delivered through the simplicity of one. Multi-institution custody is the foundation for everything we build. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now Onramp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible now than ever. Onramp, strength in many, simplicity in one. To learn more, check out onrampbitcoin.com.
I think that was interesting because it ultimately, it's a little bit further down. It shows the acquisitions that took place. Yeah, and so Dunamu, I think that's the South Korean. It was I think a large like TradFi firm that bought its Upbit, and then I'm not really sure what Digital Bridge was, but when you look at Deribit, NinjaTrader, Hidden Road, a lot of this obviously financial services, and then being purchased by incumbents. I think this trend is something we've been talking about. We're going to see more and more of it. I was meeting with a lot of banks last week, and it's just incredible. I mean, the disparate kind of the segmented areas of like understanding of like money movement being digital native versus the legacy firms, even if they have the full mental models to be able to incorporate that and build like tasteful commercial products, is not there. And then if you scroll down, the other thing that I wanted to call out was right there. Yeah. So VC investment by project category. And when you look at the deal count, you might as well put them together, but it was really far, almost like 100% more deal count was in finance and banking and infrastructure. And then when you look at the total capital raised, finance and banking was about, well, at least 50% from prediction markets, but then double almost anything else from payment and infrastructure. And I thought that made a lot of sense because, again, the whole world when it comes to finance and the movement of money is fundamentally changing. It's really crazy. We see it behind the scenes when you look at all these different what is it called, like tiny window accounts that are kind of almost already being established. I know there's like more formal process with the treasury, but in reality, when you think about a lot of these stablecoin issuers, and they're effectively bypassing what banks have been able to do and offer virtual accounts and then the yield or passing that through. It's going to just be a fascinating game to watch play out, where the incumbents are scrambling. They're going to be making acquisitions. They're also going to be developing products. And then at the same time, and those firms are going to, there's 2 places they're going to go. So the incumbents are going to be building infrastructure for other incumbents to help them get up to speed. But then at the same time, you're going to have the digital natives. So you're going to have other incumbents that are building solutions like Lead Bank for the digital natives to go. And I think like what's happening is a concerted bet that the digital natives, like if they provide the plumbing there, they will be able to outpace in net new adoption. Because I do think like independent of incumbents and what they do, there is a reality that Wells Fargo is Wells Fargo. Like I don't know anybody under the age of like 30 or 40 years old that would go and like start a de novo like net new bank account relationship with them if they're thinking about like Bitcoin ownership, lending against it, needing a card to spend dollars, like things like that. And so it makes a lot of sense where you see infrastructure and finance and banking, because you have these new rails and you get a net new company, find a niche or segment of the market that they can start from and then grow. Again, it's just a fascinating time.
Yeah. I mean, it reminds me of kind of what I was saying at the start of the pod, which is like this bifurcation between crypto, which is sort of just morphed to effectively like upgrading the legacy rails, versus like Bitcoin, new form of money, sort of separate. And I think this data around the category volume, like kind of backs that up, right? Finance, banking, payments, infrastructure, asset management at the top of the list. I think prediction markets was sort of just a hype wave around that specifically, that doesn't necessarily need a blockchain. Like, Kalshi doesn't use blockchain native rails. Polymarket does. But 4 out of the top 5 are basically like upgrading legacy tech with marginally faster, cheaper rails. And so this is kind of indicative of I think where we are in terms of what the broader crypto space has become, particularly as it relates to like where fundraising is headed towards and what things are being built and allocated towards. it's if you look at the bottom of this list, it's like Web3, interoperability, social networks, a lot of the things that were highly touted in sort of 17, 18, 19 from the crypto sphere as like the revolutionary aspects of crypto. Those are getting less love, and what is getting love is effectively like upgrading TradFi in my mind. Liam, any thoughts?
No, I would completely agree with that. And I know it's on the list too, but essentially crypto almost doesn't even really exist anymore. It's becoming merged exactly with the traditional finance and banking system in general. And you can see it through the new articles of Galaxy Digital starting a $100 million hedge fund in order to put in 30% into tokens and then 70% into alternative publicly traded equities that can understand or to have theses around how digital assets will create different winners and losers within the system. And it just makes so much sense because there are going to be firms that adopt this faster and are going to be net new winners and can understand what like the taste of what the consumers actually want and both have the distribution for it. And then there could be others who either don't have the distribution and just get squeezed out, or they don't take too long in order to actually, either partner or launch their own products or buy the relevant businesses, and then they just continue to be squeezed out or lose market share. So I think that and maybe even next year it's going to not necessarily make a ton of sense to call something a crypto company. It's or a banking company. Like they're just going to be merged into one.
Yeah. And we had a couple things on the list that sort of speak directly to that, in terms of basically, these TradFi incumbents that are in the process of making that convergence happen. And so this was one from last week. UBS plans to offer crypto trading for some wealthy clients. We've seen a number of these types of announcements from the Wells Fargo, the Citibanks, basically positioning themselves, putting themselves out there as we are thinking about this. We're thinking critically about it, how we're going to go about offering these things to our clients, integrating them into our existing systems. And so this says the Swiss banking giant, which oversaw 4 trillion in wealth assets as of September 30th, is in the process of selecting partners for their crypto offering. So again, this is still early stages. Remains to be seen who they end up partnering with. If I had to guess, probably Coinbase, as that's sort of been the what we've seen with a lot of these folks, is just doing sub-custodian relationships or partnerships with the Coinbases of the world to offer these things. And that makes sense from the perspective of, what we do know about building out a lot of these things from scratch is it takes a long time. And so these guys don't really have that lead time to be competitive in this world. And so that's why you've seen so much M&A last year. And that's why I think you're going to continue to see that ramp up this year, is because these guys have to get something done as soon as possible in order to be competitive with their peers, which are all doing the same thing. And so there was one other on the list, but Mike, do you have any thoughts on this one?
No, not necessarily on that, but it ties into maybe the other on the list. It's worth it's unrelated, but I can't help but see like how they end up meeting is Ford and GM got approved for
Yep.
banking charters as well. Because I think that when you just tie into the notion of anybody that has like a consumer relationship and then requires some form of credit, you're just going to be able to create better rails, especially at this scale. When you think about credit lending, generation, creation of dollars, if you, it's, I don't know if it's exactly analogous, but like when you go into Amazon or you need to go to a big box store and you'd set up a credit card to get, you have your affinity or affiliation there. And then it's just like another logical step. If you get the benefits and that's your primary dealer or whatever, you're going to park your dollars next to it. I think it's just a fascinating time. And we saw Sony come out with this about 6 months ago as well, getting a banking license, believe in the United States. So this just ties more into money movement, lending, and capital flows that we'll see more firms start to get formal or informal banking relationships or charters based on, partnerships.
Yeah. This was just a deal we had on the list. I don't know who brought it, but Vera. I had never heard of Vera. Singapore crypto startup raises 10 million. What do these guys do?
Yeah, it's worth actually going to their site because it's pretty clean. It's really the same concept we just talked about, right? So you ultimately have, it says global neobank built on chain. So you have the right side, which is the incumbents. You can consider Ford and GM an incumbent. They've had traditional relationships with banks and how they set up loans, set up bank accounts, and so they're looking to bring that into their platform. And then you have the other side, which is digital native firms. This firm happens to be kind of a crypto Bitcoin native firm. They offer like USDC cards against it, custody. They just raised $10 million. I think it's still towards more of a bent on the crypto side, but the reality is that this is a $3 to $4 trillion industry that has been severely underserved. And these individuals, like there's a nice overlap when you think about a lot of the stuff that's happening in AI, the Claude stuff, crypto, like it's people that are on the bleeding edges of consumer technology adoption. And those individuals want best in class experiences. And it doesn't matter how hard the Wells Fargos or some of these other banks that are looking to be digitally native, they're never going to build the APIs. They're never going to think from first principles. Like think about like Stripe buying Bridge. I'm fairly confident if it wasn't the Collison brothers that had disrupted a whole market, the Bridge founders wouldn't have sold to I mean, I could be wrong here, but my thesis is like the Goldmans or another firm because ultimately there's too much. It goes back to the whole bureaucracy and all the things associated. So it's something to look out for when you see these net new firms come, because if they have the right taste, if they have the right product, and really the right area of the market, because that's how you start in any of these businesses. You got to have like an earned secret for a segment of the market that's been underserved. And if you can start there, then the whole game in entrepreneurship is just iterating long enough to stay alive, whether it's somebody's going to acquire you, you're going to build enough of a base. And so I'm just keeping an eye on more native companies building with this new kind of like ultimately design surface for financial services that hadn't occurred, where ultimately anybody can be a bank today, anybody can move capital flows, anybody can custody assets, and how you tie that all together and serve a certain segment of the market is going to really be rewarded with acquisitions, deal flow, and other opportunities.
Interesting. Liam, any thoughts on that one or?
No, nothing to add there.
So we have a few links on the AI front. Should we do a little AI corner? And Mike, maybe I'll start with your tweet from this morning. I'll just pull that up here. As a percentage of GDP, spending on AI is expected to make all other technology cycles look small. Where did you grab this one from? This looks like it's from ARC.
I think it is from ARC. Yeah, there was a couple in there. I think the main one to call this out is just to contextualize the amount of spend across the board, because this ties into, we don't even necessarily have to pull it up, but it was kind of underreported, but Sam Altman's looking to raise $50 billion to continue on the streak in the Middle East. And it's just, I don't really have the best take or lens outside of, there'll be a lot of capital destroyed. There'll be a lot of businesses that are built from it, but it's just a fascinating thing to watch play out before our eyes, the amount of capital being deployed across this ecosystem. And then also the ferociousness of net new people coming in and utilizing these tools. I think that's really the bullish case for AI and the proliferation and value to be accrued. Is we talk a lot about, the Bitcoin and building Bitcoin space and building infrastructure, and how there's still, I see so much upside, because while there's some signal in crypto and stable coins and the rails that are being built, they're kind of misconstrued or not with the perfect lens, because they ultimately don't understand that Bitcoin is superior money and the difference between crypto and Bitcoin and dollars and Bitcoin. And as evidence is, if anybody's watched the Cheeky Pites podcast with the Bridge and Stripe co-founders, like brilliant guys, but they have no idea or care about Bitcoin. They think it's probably like legacy tech. Well, the point being is, as more people in this next bull run come from these large traditional incumbents or Stripes and Bridges that get Bitcoin, they're going to build world-class businesses. Point in sharing that is, I think in the AI space, those people are here. So the AI people, it's the thing that's in vogue. So you have the people working at OpenAI and Anthropic and Google and all these large companies, and they're working on these tools while they're playing with them. And so you've seen this already with the just latest model of Claude and Cowork. There's all this crazy stuff that's coming out. And I think that is really where probably a lot of the value is going to accrue, is net new folks standing up businesses leveraging them. And then obviously once they get the lens of you want to accrue the BTC, it just gets even more interesting. So that's at least, I think, a bull case for where value will eventually come. But right now, I mean, I think there's going to be a lot of people holding bags of kind of dog crap when it comes to these large investments.
Yeah, I mean, this raised news, you're right, it did kind of go under the radar, but it was sort of uh, foreshadowed in some sense that, if you remember a few months ago, OpenAI declared a code red, a company-wide code red, and so and then you had increased competition from Anthropic, a lot of hype and people using Claude Code, Cowork. So maybe they kind of saw that coming, and that was part of the code red. But I really think the crux of the code red was, effectively they were running out of runway, unless something changed materially to their offering and basically usage of their products. I believe it was quoted that they were going to run out of money within like the next 12 months or something, and so it was highly anticipated that they would need to raise again, and so it seems like they are going to the Middle East to try to do that and secure that. The other interesting sort of side note of this was that there was also rumors that they were thinking about turning on ads, which sort of aligns with this idea of a code red and not reaching levels of profitability soon enough where you would actually have to turn on ads, which I think at this point of the game, like that would hurt their products pretty materially in my mind if they started really pushing advertisements in their responses. Because if not everybody is doing that, then I think it's a pretty easy sort of reason to cancel your OpenAI subscription and just use one of the other ones that doesn't serve you ads. Any other thoughts on that?
I don't know about the ads in particular. I think they're a startup and it's a new technology, and so you can try things. They can fail. If they fail, you can just fail quickly and just turn them off. And if there is a real consumer hatred of ads, and just whatever, try it. I think the more bigger thing is they just haven't necessarily kept up with the newest latest from Claude, and the models seem to be slowing behind, as well as just Gemini seems to be out there doing extremely well too. And how it's so difficult for people to change their consumer behavior from going to a Google to something new. And then just the fact that, honestly, people are really slow to adopt new technologies. Most people still don't even, they've never tried out ChatGPT or any net new AI model. And so they're going to just do it directly from Google. And so, yeah, I mean, this makes a ton of sense. The first people through the door usually are the ones that pave the way for the next folks to like come in and understand what they actually did well, and then what that actually needs to be improved upon. So definitely great for the consumer, but not sure it's going to be quite as good for the investors in these companies.
Yeah,
This isn't Go
go
ahead.
ahead. I was just gonna say, I would speak sort of personally myself. Like I had been using ChatGPT for a couple of years now, and one of the main reasons I was continuing to use it and be sort of locked in was that it was one of the first to have like basically memory, so it could recall your past conversations with it and really form a mosaic of who you are and what you're trying to accomplish. Now, Claude, Anthropic's model, recently added that capability. So now I've been sort of using them in parallel and building up a similar sort of repository of memory information about myself on that side. And then similarly with Gemini, I don't know if they have as pure of a memory recall in the model currently, but you can give it access to basically your Google Drive or your Google Docs, and then it can create a similar mosaic of what you are and who you are, what you're trying to accomplish. Sorry, Mike, go ahead.
Yeah, no, all I was gonna say is, I do think there's a few things happening, or it feels like they're happening. One is like OpenAI becoming too big to fail with the amount of capital from sovereigns across the board, and then also large multinationals. That's almost like the scale they're going for. The other aspect is that I think we can't discount first mover advantages in it, specifically in a large market like this, because think about how many people still use AOL or Yahoo emails. That like most people aren't looking at the bleeding edges to get the ultimate edge. They get locked into a certain service as long as it's okay. And so I can see how ChatGPT could land there. The other thing is randomly with all this, like, I haven't fully formulated this, but you see what's going on with all this, like, what is it called? The Claude bot or whatever.
Hmm.
Uh, is like there's something there about unifying somebody's full experience to tie into this because the data adds more value, and then also you make it seamless. And they're reported like with Johnny Ive supposedly going to have this like little pin that's coming out, and I think that might actually be the first like wearable that people actually gravitate towards. Not saying I would use it, but there's something to if you have an elegant solution that can aggregate via video, audio, and then all the information depending on like how else they sync up via like Bluetooth to your phone and other things that are able to open up those capabilities. If you've seen this like weekend fervor around the Claude bot, and then you take that and extrapolate to mass market, there's something there. And if they go out and do that, that could really be an interesting dynamic. That's probably maybe even their plan. Again, anybody listening, we are not AI experts. We're just like market participants and utilizing these tools and looking at it from the outside. But it's just such an hot topic right now. We felt like it'd be good. And also we were going to have a guest that was going to be very interested in AI, but he is a little under the weather, but we'll get him on soon. And then we will have a little bit more AI talk.
Yeah, you just made me think of, in the context of sort of what Liam, you alluded to around like, we are kind of in a bubble, particularly on Twitter. Like, if you're following accounts that are involved in the AI space, you're getting fed a lot of this stuff. But like the average normie person is pretty much barely interacting with these tools in a real way outside of like basically using it as a new form of Google. And a funny example is like, over Christmas recently, I was with my father, and he likes to talk into his phone. He likes to just like audio transcribe questions into his phone. And I was like, oh, like what models have you been using? He's like, oh, I'm just using Google. I'm like, no, you're using Gemini. Like he didn't even realize that he was using an AI chatbot. He just thought he was just Googling faster. And so I think that's indicative of, I think, the broader landscape of users. And so I think in that context, Gemini does have this massive distribution edge to a lot of these players in the sense that they're going to get the normie people who don't even know what they're using, and then they end up being Gemini users. And maybe they don't even need a wearable because their phone just becomes a wearable of sorts, and then eventually you just get brain chipped, and then you don't need a wearable either. But we're probably a little ways away from that.
Yeah, I haven't done a lot of digging, but there's great anecdotes around how all Google was like the last 20 years we're setting up for this. So you needed to be able to index the internet to build the
Right.
AI deals. And so like there's just a lot there. But one thing maybe to pull up is that JP Morgan link, because that also was under the radar. And I think it's just fascinating because a lot of people will say, well, what are people utilizing this stuff for? And there was a Wall Street Journal article that came out that I don't know the number. It's like 1,000 to 10,000 proxy advisors that JP Morgan did employ to look at the different portfolios that sit within their index funds and then proxy vote on their behalf. And they effectively got rid of all of them. And they're using an AI powered platform today to cast shareholder votes. It's the industry first. I don't necessarily that, you guys probably have better lens into the dynamics there, and how that works and the potential second and third order effects. But I just thought it was fascinating for a company the size of JP Morgan's scale to effectively come out, and this is public. This actually was reported like earlier this month, January 7th. But anyway, any thoughts on that?
This is an interesting line. JP Morgan chief executive Jamie Dimon has been one of the most outspoken critics, telling an industry gathering last spring that proxy advisors are incompetent and should be gone and dead, done with. I guess it's not surprising to me because I think this is like on the nose, like a microcosm of what the early disruption is going to look like in terms of back office, sort of menial tasks of information gathering, aggregation, and then like, spitting out a result, which like isn't too difficult to get to basically. And so I think it's kind of a perfect example of like this initial phase of displacement and disruption. But yeah, so not super surprising to me, I guess.
What was much more interesting to me, I don't know if you guys saw the links about the Claude Cowork in integrating in Excel and just essentially being able to clean up everything and like create pivot tables, etc. It's that honestly is just going to save like hundreds and hundreds and hundreds of hours of very low level financial work. It's going to be interesting one, how they develop talent in that industry too. But then also, like, I think that a lot of people really say like it's just going to put everybody out of jobs. But I also, and while jobs are going to shift a lot, it's an interesting stat that I just saw recently is like 15% of jobs are destroyed and created each year. And so people are constantly shifting around like what they're doing based on new needs. And so I do think that there will be a lot more that's going to be created with this too. If you can be so much faster and analyze so much more, you can really understand, like, if you have any ideas and like think about the roadmaps that we have about, different things that we want to launch and how accelerated those timelines are going to be, and then the marginal cost of actually deploying or getting any of those to market is going down so significantly that people are going to be able to do so much more with this technology. Not unless you're like a large public company middle manager and you don't necessarily have any ideas, you just want to cut a few people from headcount. That's also going to happen, but it's just such a fascinating time that we're in right now.
Yeah, it
Yeah.
just made me think you guys must be pinching yourselves like to get out of the positions that you were, because like a lot of it is going to be like survival of the fittest, meaning that what needed five researchers, analysts, somebody to do it. You're like a lot of people, especially if you have autonomy and you're a manager, like it's much easier to be able to prompt and hold the memory, like Brian was saying earlier, versus just the work to go and like relay that to somebody, have them do it and come back. You could just do it faster yourself and get the output. But the other thing that I've been looking, or not really looking at, but it kind of ties into all this, that this stuff's moving so fast. And I know it sounds so crazy, but I don't think we're that far from like effectively having these like robots in our houses, cleaning our house, and like even potentially for some people looking after their kids. Because when you think about the cost of an individual, whether it's a nanny, house cleaner, assistant, changing things, and you see how fast that they're able to, we had the report a couple of weeks ago about gaining some level of consciousness, but ultimately like the feedback loop and learning. And you see Musk talking about this and in driving that cost down. Because I don't know what sparked me thinking about like, would I ever do that? Because you end up with this thing, but also like it's going to be made of steel and indestructible. And if it ever decides to go rogue, you're kind of like, you let this thing in your house. So it's just a fascinating thing. Like, I know this all sounds crazy, but I think within 24 months, it'll probably be like VR where, the first headset was 3,500. The first, robot will be like 15 or, 35,000, $50,000. But they'll just continue to bring that cost down. And then the ROI will be there versus having to employ others, and the convenience. And yeah, I mean, it's just going to be fascinating.
Well, yeah. I mean, it's also not, that future world. It's not like those are one to one. And what I mean by is like you don't need a bot that's specifically for being a nanny. Like your bot can be a nanny, and then it's also an expert on like fixing your plumbing, right? Like it's an expert on all. It's a generalist expert on basically anything you would tell it to do. So, yeah, fascinating to think about how that plays out. I'd probably take the over on 24 months in terms of like people really adopting it, but maybe on the margins, on the edges, people testing it out, similar to VR, how you described. Um, Anything else on the AI front? There was a couple other sort of more Bitcoin related links I wanted to get to, but anything else there?
Yeah, let's rip those real quick.
Well, I just wanted to share the most successful Bitcoin treasury company might just be Stake and Shake, boys. They added another 10 million to their treasury about 8 months after rolling out their Lightning integration. This is what we like to see: a Bitcoin treasury company that is a company first and is stacking Bitcoin, producing real world value. Whether you think fast food is valuable or not, they are using tallow in their fries, so maybe it's a little bit more better for you than the McDonald's of the world. But just thought this was worth highlighting in the context of everything we saw last year around Bitcoin treasury companies and sort of a lot of those crashing back down to earth. This is sort of a different example, similar to the Squares of the world or the Figmas of the world, who have Bitcoin as part of their strategy, but it's not their core business. Isn't just stacking Bitcoin.
Yeah, this might be the most Bitcoin native company on the planet Earth, because not only do they have a fundamental business, selling, feeding individuals, but when you go and tie into, it's not just adding the $10 million, they're accepting Bitcoin, they're paying employees back Bitcoin rewards. So you look and squint and see about employee retention and savings. Obviously it's early. So you stack the Bitcoin, you can pay in it, bypass interchange, you're employing employee continuity. And then ultimately, again, it all goes down to inflation. And as your competitors are feeling it, and as they have to degrade the service, the quality, and also increase prices, you give yourself more optionality. This is just how it's going to play out. And so it's cool to see. Yeah, we got to get in touch with these guys. They're down in San Antonio where I grew up. They need better custody. We need to work with them. So yeah, but it's very cool to see.
Yeah, thanks for highlighting the employee benefits thing too. That was, I think, last week they announced that they're going to be paying employees like 21 cents an hour in BTC terms or something to that effect. William, sorry, I cut you off.
No, I was just gonna say it's fascinating too that it seems like it's one guy who pretty much, I mean, through a holding company, but seems to be owning all of Steak and Shake. And so I think that they do have a franchise model, but in theory, I mean, like, just that's always what we kind of see is the orange dictator is the one who can actually like push forward the strategy. Although we have seen MasterCard try to acquire Zero Hash. That's pretty much one of the few outliers of examples of companies that actually try to get into the Bitcoin and digital asset space more broadly. It's usually just consensus of one who can actually go and change policy in order to adopt things like new technologies on the edges, unless they're especially non-consensus new technologies. And so makes total sense. Would imagine that we see more like this headed into next year too.
Here's what keeps Bitcoiners awake. You're still securing millions of dollars the same way you secured thousands. That hardware wallet in your drawer, your family's entire future depends on you not losing it, forgetting the PIN, or something happening to you. Onramp's multi-institution custody removes that burden. 3 independent institutions hold your keys, no single point of failure, no seed phrases to protect, no explaining complex recovery processes to your spouse. And now we're offering flat tier pricing. One predictable monthly fee starting at $250, whether Bitcoin is at 100K or 500K. Plus, with Onramp IRAs, you get the same institutional security with tax advantage growth. This is how smart investors protect generational wealth without the weight on their shoulders. There's strength in many. Learn more at onrampbitcoin.com.
Agreed. I wanted to pull up this tweet from Jameson Lopp. He is retweeting Michael Saylor, who last week said the greatest risk to Bitcoin is ambitious opportunists advancing protocol changes. Now he's sort of referring to, I believe, like whether it's the quantum discussion or the op return stuff, like Saylor has sort of positioned himself as an ossification maximalist, like don't mess with the protocol, etc. Let's not fund devs because we don't want to shift their incentives. Lopp is saying the greatest risk to Bitcoin is that ownership of keys is centralizing into fewer hands. It's not surprising that a guy who stores 700,000 Bitcoin with trusted third parties can't see that. And, it stuck out to me, obviously, as, working in the Bitcoin custody space. This is frankly why multi-institution custody exists. It's to prevent, frankly, what, part of the reason that gold failed as money in terms of it centralizing in bank vaults. And you can see sort of the writing on the wall of something similar that could happen if we just allow basically a lot of the Bitcoin to centralize at a few custodians, namely like Coinbase, who's the custodian for most of the ETFs, which are seeing massive inflows over the past 2 years since their launch. And so, if you can distribute that control and access, you aim to avoid that ownership centralization that he's referring to here. Mike, any thoughts on this?
No, I think it's spot on. I think we're just going to have to wait as the price rises. It's all the things we've been talking about and building for. The reality is what makes Bitcoin different is you can insert governance at the asset layer, so you can bypass even the notion or idea of risk from any third party to try to have more claims than on the underlying. If we enter this world where there's Bitcoin-backed banks or there's sovereign entities that want to seize the Bitcoin, the reality is we're just so early that folks aren't too concerned with it. It's a barbell. You have the larger holdings, and nobody's ever gotten fired for going to Coinbase, so you go there. And then you have the individual, which historically had no third-party options that they could trust and plan on, because historically you couldn't trust a third party because they held unilateral control of those assets. That's really where we get excited, whether it's building this business or investing in businesses that are building with that framework, because on a long enough time horizon, if you're right, the beauty of the market when it comes with money, they just seek out better products. It doesn't even matter the name of the firm or even the lendy, because yes, financial services, lendy, those things matter and will help. But when you create a better product in the sense that no entity can unilaterally move or lose your assets, people will look for that, because when they're holding material amounts of wealth, the alternatives will be even worse than going with a new entrant, because they ultimately have to worry about how do they legacy plan, how do they think about dynasty trust, all the things that will continue to grow and become more acutely painful. And then the other side of that is that other firms and institutions will mismanage that underlying, whether it's because somebody's phone gets hacked, social engineering, seizing, loss of funds, everything that's happened for 17 years. So it's good to see, LOP in the discourse call out. But and also the other thing is, treasury prices will feel this. We talk about treasury companies all the time. Most buyers of treasury companies and their shares don't even understand that the multiple layers of execution risk, and they bypass the custody risk that has historically been a pain point. And so the first time a treasury company mismanages the keys, whether it's because they did a self-custody or the third-party custodian they used, or they're lending out the asset to generate some kind of incremental yield, a lot of treasury companies will feel that pain, because ultimately they don't share how they custody, they don't provide any proof of reserves. And then that's, again, when they'll recognize, okay, there's just a better product that we have to give to the market if we're going to want our share price to continue to remain. So again, we're still early in all of this.
Very well said. Maybe one other thing before we wrap. We can put a nice bow on the beginning of the conversation around silver. I found this tweet fascinating. It's this guy who is sitting on 1,000 ounces of silver bars. He says he bought physical, did what everyone said to do, real assets outside the system. Tried to sell some last week, trying to sell it today. Refineries won't touch it. Dealers lowballing 30% under spot. Banks looking at me like I'm selling contraband. Turns out owning something and being able to exit something are two very different skills. This is the same trap I see in trading, blah, blah, blah. Basically, point is, the market structure, the fundamental market structure issues of precious metals that, plagued the assets as money historically still exist and still persist. So if, you do what this guy did and did it the right way, you didn't get paper exposure, you bought physical gold, it can be very difficult to get out of those positions and actually use them as money. And that's where, the value prop and the digital native nature of Bitcoin really starts to shine. Being able to transact, send it anywhere digitally over the internet at any time not 30% below spot, like he's articulating here.
Yeah, I don't buy this.
You think this is just fake news?
Yeah, no, it's not that it's fake news. The analogy, because I was having this conversation with somebody else around, we have to be intellectually honest. I'm not saying you're not, but it's because we're not familiar with that side of the industry. It's the same thing when we talk about on the broadcast with Brahm about gold being superior or Bitcoin being superior to gold. It's well, maybe it's not right now because of liquidity and the recognizability. So the angle is most often people are like, well, I can't verify gold. It's well, you actually can, because there's 99% of gold. If you're buying anything that's jewelry is usually marked exactly correct. You can test it actually fairly well, or you can go into a local place and they'll test it for you. And then anybody that's going to a gold bar, and you're talking about anywhere between 10 to 100 ounces, you bought that from a reputable place. There's certain serial marks. It's not really, once you get to a certain level, you know where you got it from. And it's if you're buying at that scale, the ability to assay and determine if it's fake, you're just not at, there's a different level of that when most people talk about. And this is a similar example. Is like, if you bought 1,000 ounces of silver, where you bought it from, you generally know and have different, like, it's like if you bought 1,000 BTC, you follow the industry, you know the players, they exist. It's a capitalistic market to take those silvers. They provide brokerage in the same way somebody would buy the Bitcoin, right? This is equivalent of like saying that it's like the OTC bid for Bitcoin doesn't exist. Because Bitcoin goes through the roof and nobody's buying and selling. It's just like not true. There's market makers out there. And so then you take that person knows where to buy, sell. So that's the point. Is like, I don't disagree that if somebody's holding like 1 million ounces and they have like 1,000-ounce bars, and they need to move like that size. But even in that case, I guarantee you with a quick search, you can find the relevant counterparties. And then somebody that is doing 30% under spot, I guarantee you in that industry, somebody will come in at 20 and then 10 and then 8. It's just very similar to BTC. So I think these narratives help in the like notion of like, this thing sucks compared to crypto and Bitcoin. And I agree, like it's a lot more liquid, but I don't think it's as pervasive as somebody that if they have real size, how they can't get out of that position.
Yeah, I mean, that's all fair. But you would agree, though, that like it's still more difficult, like generally speaking, to like know who those correct counterparties are and manage a meaningful size of physical metal.
Well, yes, but it's almost like a fallacy built into the question in a sense that if I was off the street, and I would be hard to do it, but I also wouldn't hold 1,000 ounces of silver. So if I held 1,000 ounces of silver, then I'd be sure I'd know where the credible places are. So like, if you hold 1,000 ounces of silver, shouldn't you know how to get out of the position and know where you bought it from and who's relevant in your local area? Right. So like, that's it's just like Bitcoin. Like, imagine if you were just off the street and you were this guy and never had held Bitcoin. Well, like, you can make the same keys. I don't know how to buy 1,000 BTC because I don't know who's going to be relevant, who's going to take the wire, who's going to quote me under spot or whatever the thing. Like, you can make the same case. It's a liquid market. Now, how far has the price dislocated? Because there is truth, or I think perceived truth, in the dislocation from spot and futures and like whatever the hell is happening. Like, I think that there might be something there. And then the anecdote gets really great Twitter views when you're like, I called the first place, because that also is fair, that there's fundamentally something different than a bullion dealer than a like spot gold purchaser. And what that means is most people, when you go and see we buy old gold and they're on every corner, what they're buying is your gold and silver jewelry or junk, what's called junk silver, which is pre-64 90 pre-64 gold, dimes, quarters, and half dollars are 90% silver. And so if you go to a like We Buy Old Gold place, they will quote you that 30%. That's their margin, is 30%, because they have to test it, they have to refine it, it's never pure. But when you go to a bullion dealer, they have fundamental prices that they're quoting. There's like Deal Engage and these other platforms. In another life, I had actually randomly was involved in that industry. So it's just not like, it's the same thing with Bitcoin. They're just like these niche areas of the market that nobody knows how to buy it. But if you already have exposure, then you probably have 100 places where to buy or sell it. In the same way, somebody holding 1 million or whatever went to Galaxy. Think about how many people bid on his business for $1 billion, whatever the 7 billion that was sold on the Bitcoin price.
Mm-hmm. Yeah, reasonable takes. Liam, anything on the metals, on the rocks?
I haven't gone through that process before and don't plan to, so I don't necessarily have anything else to add. But I would add, if you're serious about it and serious about your allocation, you could figure out pretty quickly how to get some reasonable price. I think that 30% seems a little bit far-fetched, but there are definitely you're not going to get likely quite as good as of prices on something that's a little bit more illiquid than Bitcoin.
All right, gents. Good place to wrap. Thanks, boys. See you next week.
Thanks.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.